Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly, and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Hey everybody, welcome to the stream. Redding Johnny here. And we have had a little bit of a crazy day today. For anyone who is tuning in for the first time, if you go back and look at some of our previous streams, you will see that we have focused a lot on BNED lately. And today was kind of the day we were waiting for, and we were planning to maybe check a little bit on this stream today because they were supposed to come with their Q3 report. But they have postponed it and rescheduled it for some reason that is currently... well, they haven't given us the actual reason yet, but there's some speculation to why they have postponed it or rescheduled it. I will comment a little bit, but I don't want to speculate too much. I will say though that it's a bit noteworthy to me that the stock is up today, because usually when you find some of these rescheduling, that's not necessarily considered very positive. And I think the price plummeted in the beginning. It was down like 7%, but then quickly came up again, and I think we ended on 97 cents or something, 3% up. 98 cents, yeah, 4% up. A little bit down in aftermarket, but that's just noise. I'm not paying too much attention to that. You know, 4% up on a rescheduled news on a quarterly report is... I will not say that it doesn't happen, because it probably does happen all the time, but I usually that's not considered a positive news. But as we have digged in through a little bit in the history, they have done this before actually. They have rescheduled before, and I will go through those reports in just a little bit. So that's also interesting, and it actually it almost broke up above $1 today. I was watching it, and as you can see here in the day's range, it went up to as close as you can get to $1, but it never came. It never went all the way up, but you know, we are close then, and. As you probably know, they have received like a delisting notice from the stock exchange, but I'm not worried about that at all. I think we will get above $1 here in the time that we need for them to not be delisted. I don't think that is something to pay attention to at all. So yeah, I'm not worried about that point. It's just a bit interesting to see how close we were today on the news that the report is rescheduled. So just a point to keep in mind, I think, in a day that is maybe a little bit messy. So But yeah, here is the actual press release. What did they say? Today announced that the company is rescheduling its third quarter fiscal year 2024 earnings press release and investor conference call previous scheduled for, today. BNED intends to issue a press release announcing the new date and time of its third quarter earnings report and conference call as soon as possible. So they don't really say much here. It doesn't make us a whole lot smarter. But if you read through the language here, it can be interpreted maybe. But it depends on what kind of eyes you're looking at this. But maybe that this has something to do with refinancing the debt. There's some speculations about that. And that they need to reschedule it to report it more accurately to us. And that's what they have done in the past, actually, and that was refinancing of the debt. But I've seen some comments about maybe there's that they are being acquired, and there's all kinds of negative news also that can be a possibility here if these things. Sometimes when these things happen, it's not positive, but I can see that this has something to do with the refinancing of debt, but I'm not sure yet. So I think we just have to wait and see what the next step here will be. But we're not going to focus too much on the report on the stream because it doesn't exist yet. So I hope they will issue this press release that they are talking about tomorrow, but I'm not sure. I was looking in the history here, and as you can see, this is almost exactly a year ago. They were rescheduling this quarter in 2023 as well, but I found a little bit of a difference, and I'm not sure how much you should pay attention to this, but they kind of listed why they rescheduled in this press release, but then I don't know if they can go back and change the actual release after it has been released. I don't know how this works, so I'm not gonna say anything, but I just found it a bit interesting that they had actually listed the reason in this 1 year ago. And then they wrote the rescheduling allows the company adequate time to close on its amended and extended asset-backed revolving and term loan credit facility, which the company expects to close on before Thursday, March 9, 2023. So it kind of gave a little bit of more information that they did this time. This time it just said that they were coming with a press release, and hopefully we will get some more knowledge about it soon. Hopefully tomorrow, but I saw when this happened, I think they reported, I'm going to check it so I'm not saying anything wrong here. Here, 6th of March is the rescheduling news, and then they actually report 9th of March. So it didn't take too many days before they actually came with the report. So I hope they will do something similar this time, and I hope that it has something to do with the refinancing of the debt that is due in December this year, I think it is. That it has, but I don't know. I've seen some comments today. BLCM, we have talked about him. Great guy, has provided a lot of great information here and a lot of a little bit of deeper level thinking with different scenarios and possibilities where this can go. And he's just saying, like, BNED delaying earnings release and conference call. No reason why the numbers aren't available. BNED must have finalized a deal. And he has received some likes on that comment. So there's obviously people thinking a little bit the same. And again, keep in mind, we have 4% up today. So it's definitely noteworthy. Definitely sounds like good news time, blah blah. And then this guy is saying that it could easily be bad news, and then BLCM is making kind of the same point that I was just talking about, that they delayed their earnings release and the stock went up. So that's you know, that's it is noteworthy that it went up today. And I see we have some people tuning in today. Feel free to use the chat, everyone, and ask me questions or even throw me tickers that I can pull up. I've actually had some issues in my fundamental sheet today that I tried to fix before the stream just now, but I couldn't do it in the short time I had. So there's some information that I'm not gonna be able to pull in today, but I will find them in different ways. But that made me, because I had to try to fix the issue, it made me not I couldn't go through everything I wanted ahead of the stream, so I'm a bit behind today. I have some companies pulled up already that I plan to go through, but feel free to throw me some tickers today. It would be helpful, and maybe I can pull them up in the fundamental sheet. And if you have any questions about BNED, feel free to ask. Ranger Dane and I was actually, because there's more things going on right now in BNED. There's also been, like, the Department of Education has a new, they are working on a draft for new legislations about the first day complete model, and the issue is like opt-in, opt-out, like opt-in versus opt-out model, and there's been so much confusion about what they actually try to do there. So I have to kind of refer to, like, the previous streams if you are interested in a little bit of a history there. But my point was that Ranger Dane and I managed to tune in on the live session they had on Teams. I think it was yesterday. And for me personally, it was much better to watch them talk about it live than reading the transcript, because in the past we have actually read the transcripts, and then it takes away some of the emotions and stuff like that. You can interpret a little bit more when you see people are speaking live. And there was some really good, once again, arguments, and just like common sense, logical thinking from the opt-out side, and they are speaking very clearly and very, I think, very direct, and they can back up everything they say with a lot of data and research, and you know, what do you call, like, they have like service and stuff like that, where students are very happy about it. And then once again, in my opinion, the opt-in side was fumbling, but they seemed determined to keep the language in the draft. And to sum it up short, the consensus is not reached. There was a lot of thumbs down for changing it to an opt-in model. It was 7 thumbs down against it. 3 were neutral. They put their thumb sideways, and I think 3 or 4 were for it. So the majority of the people who are there are against it, and that means right now that they will keep the opt-out model for quite some time, actually, this year. And then I think the next part now will be to work on the draft again at a later stage this year. But until then, they will keep the opt-out model. At least that's my understanding of it. And it got a bit heated. If you can watch the videos when they post them on YouTube, I suggest that you do it, because it was a bit, I wouldn't say entertaining, you know, but it was a bit cool to see how it works, and it got a bit personal and heated, and they were pretty clear from the opt-out side that they felt a bit one of the guys called Scott, I think he made some very good points, and he even said that he felt like people were questioning their authority and not authority, but integrity. And they felt like they wasted a lot of time posting a document with a lot of good things about the transparency, because that was the main issue in the beginning, but now it's not the biggest issue anymore. So it's like it's a lot of frustration, it's a lot of confusion still, but it was very clear this time that the majority is against changing it. And even one of the guys who have been very clear, he was still clear on that he wanted opt-in, but he was opening up for, he could see the benefit of, you know, bundle these books together and sell them to the students with a opt-out model. He was kind of saying that he could see the benefit of that, but he still voted for the opt-in side. But it's just interesting to see the development. Bottom line is that they didn't agree, and this will probably take more time. But then that's where we were hoping that this report will be very good, and we were excited that it will come today, but it's postponed, so we just have to wait and see. Dane and I will be back on Saturday, of course, to give you an update. Hopefully we can learn a little bit tomorrow if they issue a press release. But we just have to see and see what happens. Meanwhile, if you can find your way to Seeking Alpha and stuff like that, if you are new to this, I urge you to actually read the article of Courage and Conviction here, and also read the comments. It's valuable stuff. And here, if you want to read the transcripts, this is the website for it. And the most recent ones are these ones, but they haven't posted them yet. So it's going to take a while before they release the transcripts here. Probably like 3 weeks, actually. But you can read from February, and you can even watch the YouTube videos here. But that, keep in mind that that's the last session, and this was the new one. But it's good to you can check this out if you are interested in this. Yeah, so that was the BNED update. I see some comments. Have you looked at the wing? No, I haven't. I threw it out last stream just because it's funny what people are paying for a wing restaurant. I will pull them up straight away here and see if I can find them in my sheets. So Wingstop, I guess. Keep in mind, I'm not from the States, so I don't know all these companies. But Wing, let me know if I'm pulling up the wrong company. But nice to see you. If you were on Dane's stream last time, I couldn't finish that whole stream. He had a really good one on Tuesday, but I haven't been able to watch it all. I watched like around a bit more than an hour from it. But cool to see that you are here again, Name. And then Winey, Cornelia Lake thinks this earnings push is refinance related. Yes, I saw that, and that's initially what I was thinking as well. And I talked with Dane, and he was also on the same track of how we were thinking. You see, I have it up here, Winey. I saw this tweet. You know, BNED pushes earnings call and stock is green. What we talked about, right? Presume this is a refinance related. There is a risk on the going concern language leading to debt acceleration, but that be suicide for lenders. Opt-in, opt-out, the base seems to be moving in the right direction. Yeah, I agree. Well, with a worst case outcome off the table, I agree. High risk situation that could be a bagel in the near term, but if they make it through the obstacle course, could be worth a ton. Yes, that's kind of the whole thing here. And then these people are also talking what I just went through. They rescheduled in March of 2023 to close on credit lines, which is this one. So they have done it in the past. But for me, the big difference between then and now, which is a bit annoying in my eyes, but I'm not too worried about it, is that they provided the reason for it in this issue. And once again, I don't know if they can go back and change that later. I don't know how that worked. I didn't I was not in BNED 1 year ago, so I don't know. But they have done it in the past. If I remember correctly, they pushed earnings back in the past in order to announce complete covenant waivers. And I mean, once again, I'm repeating myself a bit, but once again, it's up on this news. That means something to me, at least. And I just saw here on stock tweets also. Sometimes I pay attention to stock tweets, and they are a bit more worried here, but it's not like I hold a lot of weight for these people. It's just interesting to see how things work, how the dynamics work. There's a little bit of a panic here now, and maybe, you know, emotional. But don't get me wrong, like, of course you don't want to see these rescheduling things. I would, but honestly, the most disappointed thing today, in my opinion, as long as we were up, is that I was really excited to see the report and the news, which we now have to wait a little bit longer for. So that just sucked, in my opinion. Let me know if you, Wani, what do you think? What do you think about this rescheduling? And have you been in any companies before where you've experienced the same? And how did that go, if you have? I can't remember that I've been in one that has actually rescheduled, but it happens. It's not uncommon that it happens, but usually it's a red day then. Yeah, Wine is saying, sorry, is it Winey or Weenie? Sorry, I'm so sorry, I don't remember. I'm trying my best. Okay, he's saying rescheduling still green. Yes, I think that's a good point. And not only just still green, we almost broke $1. Almost. It was right there. Look, you can't get any closer. So it was almost above $1 on this day. And that's, I think you see now, of course, it's noise. Unless there's some new news that I haven't paid attention to, but maybe it will come while we stream. Who knows? Yeah, yeah, I guess it's whiny then. If it's whiny, say yes. X Station, yo, hey, nice to see you. First time here, right? Haven't seen you before. Thanks for tuning in, by the way. Really appreciate it. Whiny, thank you. I'm gonna remember Whiny. Okay, thank you for everyone who's tuning in, and yeah, just use the chat. I will pull up things that you are interested today, and please ask me some questions about BNED if you have some questions. I'm not sure if you guys are involved in BNED, but if you have watched the previous streams for a long time now, Dane and I are very interested in BNED, and we are following the development very closely. And I think it's Dane's, he needs to say this himself, but I think it's his biggest position, and for me it's my second largest position, and for me I have a lot of money in it, for me personally. So we are invested here. Yes, been chatting with, okay, on Reddit. Okay, cool to see you here, and if you have any questions about the sheets as well, feel free to post them. And I'm using Google Sheets instead of Excel. Dana is using Excel, so just ask some questions about. It's been a while since we built them, so I might have to refresh my memory on a few things, but we can go through it if you want to and have some questions. Are you using Excel or Google Sheets? But yeah, I think I will start with the dashboard then. And by the way, my issue today is like I'm pulling in stuff from MarketWatch and they are blocking it today, so I have to find another way to do that, and I haven't been able. I couldn't do it in the short time I had before, so you will see some errors in my sheet today, but I plan to fix it before, you know, before the next stream. I'm using Google Sheets and ShareRadar. Okay, cool. I'm also using Google Sheets, but I'm using Y Sheets for my data provider. So we are all a bit different then. And have you been able to build the entire system, Xstation? So I saw in the risk column some things were up. Nvidia 5.5% up again. Look at this. Look at this. What can you do here? 0.5% up again. Look at this. This is so bullish right now, and overbought again, even higher here on the RSI. I don't know. I all I can say is that I wish I was investing in it down here. Let me know if you guys are owners of Nvidia. Natural gas a bit down. Coffee up. Same is up. Yeah, some metals and mining. I found some metal companies in the daily movers today. Uranium up again. Doesn't look too bad this chart either. But I have to pay attention to the development after this. But so far, it seems to hold up here and maybe a bounce back. Just paying attention. Metals and mining. Yeah, a bit sideways, but slowing, getting up there. You know, ammonia's up. It didn't really, stuff didn't really catch my eye today. Wheat, corn is up. Wheat is a bit down. And what about Bitcoin? Bitcoin getting high. The name, another interesting and struggling business is NDLS, Noodles and Company. They just got another CEO, I think. NDLS, that sounds familiar. I will put it up. I think I've done them before. Just curious to see lumber, because we saw some home builders last week in the daily movers. Price of lumbers. This is a ETF. Yeah, not too much going on here. Natural gas. And by the way, I'm also in ALTO. And ALTO has their earnings report 14th of March, I think, so next week. So Justin, we're posting again. I think the estimates. Let's see. I'm not going to predict anything here since the last one. It's too. I just want them to show us that they can turn this a bit around from the last one. But Justin comes with some good updates here all the time. Where were we? Yeah, it has gotten a bit low, you know. Maybe on the rise up again now. It was down fairly big today. Big moves these. Silver mines up. We saw some silver last week as well. And Virgin, classic Virgin. I feel like Virgin always shows up green already in my sheet. You know, I have conditional formatting that kicks in at a certain percentage. Virgin lights up a lot in my sheet. Yeah, interesting to see just what has been moving. And in terms of ALTO, you want to check the corn charts, you know. But this is what Justin were writing about the crush margins and stuff like that, and it looks promising compared to a year ago. But ALTO will be more also a story on the future guidance, the news about the carbon sequestration program, which I expect actually to get solid news on this time. We are getting close to the summer. Which they have promised in the past that they will have something solid by then. So we are getting close, you know. And hopefully they can beat the estimates and stuff like that. Maybe they have some updates on if they're going to sell the West End plants, or if they're not going to do that, and they're thinking behind it. So let's see. I think it's the 14th of March. Eleven of March. 11. So when is 11? Yeah, Monday. Says there. Duh. Monday 11. I usually I tune into these and I watch the thing. Kingdom Capital has been on them and asked some good questions in the past. So there's definitely interest in ALTO as well. That's my biggest position, by the way. All right, let's go into the daily movers. As always, I check these like an hour before I go on. But I want to go through them anyways again. Maybe in that hour they pull in something else that I missed the first time. I've seen some insider buys lately in the daily movers and in my tracker sheet. So that's good to see, but it's kind of in the wrong companies, not companies that I track closely. But saying that though, I have seen inside buys in my tracker sheet as well. We can go through them later. Yeah, I saw these. Fuel cell energy again. And when I'm checking, I'm looking at these multiples. I'm looking at, I have it sorted for percentage to 52-week low. So that's a big one for me. Of course, the market cap, the performance here, and then a little bit. I have a filter that I've filtered out most of the biotech companies and stuff like that. So I'm not too picky with the industries and the sub industries and stuff like that, you know. I like to see big insider ownership as well. Not so interested in banks and insurance, and not also REITs. I'm not so interested in REITs. And this is a big for me, 14 billion in market cap. It does look a little bit good, but I'm not gonna spend time on the stream. The stream is for like we're saying this often, but we have different portfolios as well. And the stream, what we show here, it's a very clear and certain strategy that some people may look at more risky than like normal value investing. It's definitely deep value investing, built on the Roaring Kitty style, if you are familiar with Roaring Kitty, for sure. So 14 billion, that would be a bit high for this strategy. Yeah, I don't see too much new here, so I think I will jump into the fundamentals then straight away. And of course, I have the tickers that you have thrown my way, so just continue to give me some tickers, and we will see if we can get to them today. And X-Station, you will probably see that my sheet looks a bit different than Roaring Kitty's, but the stuff we are looking at are a lot of the same. And it also, of course, naturally looks different to Ranger Danes, but again, we look at the same stuff, the same trends and stuff like that. They are a bit different. Also the numbers, because they come from different data providers. But it's about catching trends. So GTIM, so this is what I talked about. I don't get the industry and sector and the description, and also the chart. The chart today is for some reason, and also the short interest. This is what I have to fix, but I couldn't do it before the stream. But I have links here that will take me to the same stuff. So there's no problem. I will find the information. I like to read the description first. And you can go to Yahoo Finance and go to the profile. You see the industry is a restaurant. Good Times Restaurants, through its subsidiaries, engage in its restaurant business in the United States. It operates as a franchise Good Times Burger and Frozen Custard, an upscale quick service drive-through dining restaurants, and operates franchises and licensed Bad Ed's Burger Bar, a full-service upscale casual dining restaurant. It's based in Golden, Colorado. Tiny, 29 million in market cap. That's even tiny for the strategy that we are using. But there are some things straight off here that I like. You can see they have been purchasing back some shares in the last years. Revenue has stagnated a bit. It's a bit flat, and but you know, after COVID years, from then it's been up again. Of course, it was a bit more profitable here before COVID hit, but then quickly bounced back. Plus, buying back shares. The margin seems to be going down a little bit though. These are 3-year averages. If I press this button, I get taken to the single years. You can see they are a bit down, some of them at least. A bit mixed there. They do have some depth. They show up as levered here, and then my sheet issues automatically shares. But as a restaurant, we need to go and see what their depth is, because I assume they have a lot of leases on the depth. Tiny market cap, yeah. This is, but saying that though, BNED is also tiny market cap right now. But this is definitely, I'm not dealing in too many of these smaller ones. My sweet spot tend to be like from 100 million to maybe 800 million. But I'm not against looking at these, you know. If you get one of these rights, you get the big winners. So yeah, there's some leases. So probably not really that levered then. And you should take a little bit of this off. Positive earnings. Also on the 3-year average, but they had a good one after the COVID year, which gets the average a lot up. They do generate cash though, and even growing since last year. But if you look at the 7-year average, it's not a lot. But I like, even free cash flow is positive on the 7-year average, you know. Not a lot though. Insiders own 25% here, so I just want to see who they are. So this director here, he straight away owns 20%. And then you have a few smaller owners here. Still big owners, but compared to him, he owns 20% of the company. Maybe we can check Whale Wisdom also if there's other owners. This is the right one. Yeah. Yeah, so he's by far the biggest owner then. Not really any big owners here. Lack of insiders recently though. And was that the same guy? Charles Jobson. Yeah, no. Here he is. Tiny purchases though. Look at these. Even if the guy had bought multiple times, these are all tiny purchases. It doesn't hold much weight for me. But I do like the 20% owner is noteworthy. Just want to see what people are saying about them. Oh, Kingdom Capital is here. Oh, he has a lot of articles. Alright, interesting. Buy rating, both of them. Just want to check the comments on those. There's some updates. So these comments are somewhat recently. What are your latest thoughts on the company? They are struggling with... on the bright side, they are extremely undervalued, generating free cash flow and buying back stock. They bought back... That's what we saw, right? Seems like the good times investment are bearing fruit. If this lawsuit... Oh, there's a lawsuit. It's still cheap and the buyback is making a mark. Just was hoping for more by now. So underperform a bit in his opinion. But he still says that he likes how they look. They are speaking about the same things that we saw. We saw the share buybacks. We saw the free cash flow generation. Even on a 7-year average, they are positive, which is something you like to see. They don't have a lot of cash, but keep in mind the debt was a lot of it was leases. But they do trade above tangible book though. Also something to pay attention to. Oh, the name. What stream should I watch if I want to hear more about ALTO? I don't remember exactly one stream that you should... We have gone through and we have mentioned ALTO in many streams. But what we do, the name, is that in the description, we always list the tickers that we do research on. And I think we have listed ALTO and BNED fairly... like a lot lately. And sometimes in the whole stream we don't go through in depth always in every ticker, but maybe if you try to look up the title, the first time you see ALTO probably is the one you should watch. And I apologize that I don't remember exactly where we have gone through it in depth, but we have actually pulled them up many times recently. But I advise you to, if you want to do proper, like, if you don't know much about ALTO, go to Seeking Alpha. Look here. And read Justin's article. Just read his article. Both of them. This one from May. This one is probably the one I would start with. This is a long article. Very well written. If you can keep up with all this text, you kind of have the whole thesis. And also the explanations why the opportunity exists. And also, of course, go through the comments. But his most recent one is from October, which was before earnings. The Q3 earnings that crushed the stock price because of some negative surprises that very few people could predict. And then, of course, in the comment section here, there's a lot of good discussions about what happened and, you know, the view looking forward. You see, there's still comments going on here. Whatever happened to that share buyback they talked about from last year? Seemed like a fake PR on their earnings if they didn't use it this last quarter. I don't know about that. But anyways, I will highly suggest that you try, by all means. I'm not pushing you away from the streets, but I just can't remember exactly one where we specifically go through ALTO. There's a number of them. So try to find them and also ask questions. I can try to answer you the best I can. But Justin's article, they are solid. And his Twitter, this is Justin on Twitter if you don't know, Domo Capital. He posts these tweets every now and then that explains and updates everyone on his thinking. And he also has a YouTube channel, but he took down his videos. He had a Q&A on ALTO and PBI, but I can't find them anymore, so I'm not sure if he has permanently taken them down. Yeah, in my opinion, ALTO is very interesting. Like I said, it's my biggest position, and I've been in them for years. Of course, my timing was wrong. I should have bought more when it dipped like down to like a year ago to 150. It went all the way down to 126. But I'd have averaged down when it was now recently below 2. So I have averaged down a lot. But of course my timing on it were wrong to start with. I regret that I didn't wait longer, but it's easy to say after. I'm still in it and I have averaged down, so I still believe it. And my thesis has always been this summer with the carbon sequestration program. And if you take away one positive from the Q3 earnings, that was it. They had some news about, promising news in my opinion, about the carbon sequestration program. So we are getting close to that, you know. So my thinking is, even if they mess up this time too, I will. It depends on what they mess up on, but I will try to hold till the summer and see what happens then. And I will of course be open. I will let you guys know if I change my thesis or thinking or sell out or whatever. If I add, we try to be, or we have been 100% transparent so far with our positions, with our selling, with our buying. I also bought recently into BNED last week actually. So yeah, But interesting, GTIM. I like that Kingdom has followed them and that he still find them interesting. I do like the free cash flow. I do like the operating cash flow. That's a lot for them. 70 cents on a 2.5 almost share price. But I'm a bit worried with the margins. He mentioned a lawsuit. So I would need to look into that. I do like the share buyback. Revenue has stagnated a bit, but it's still high if you take the market cap into consideration. And the fact also that they have survived pretty well after the COVID years. Positive earnings. Yeah, so there's stuff that I like here. Kingdom involved. I will probably actually put them to my tracker sheet. However, tiny market cap, and I would want it more cheap than it is right now. So that means even more tiny market cap, which probably means that it needs something drastically needs to happen for me to buy into this. But I don't mind adding them to my tracker sheet. So I'm just going to quickly do that. Lawsuit resolved in GTIM's favor, I think March 1st. Okay. So probably that's the spike up here then. Thank you for that, the name. I'm guessing that's what we see here. The spike up. Okay, thank you for that update. So that risk is then off then. Sorry, I'm just filling in some information here and I'm gonna add them to my tracker sheet. This is like a button, a script. I just fill in, I press save, and it automatically adds it to my tracker sheet. A good price for this, I don't know. I would kind of like it down toward, yeah, I was thinking down towards 2, but... $52-week low is 215, you know. I'm gonna put 2 just to have something to look for. Might never get there, and as I said with the market cap, then it starts to become very low. I do find it attractive fundamentals. I'm gonna write some more comments here. Fundamentals looks all right. They generate operating cash flow and even somewhat good free cash flow. Debt is mostly leases. Lawsuit recently taken care of. Kingdom interested with 2 articles. Still find them promising, but a bit disappointed about the development. Bought back shares and has somewhat good results after COVID. Pay attention to a drop in price towards 2x. I need to mention the 25% inside ownership also. 20% of from Robson was his name, right? I just need to double check that. Jobson, not Robson, Jobson. There you go. Then we hit save and it automatically adds it to my tracker sheet. We probably close out on a few things here. Yeah, they are in the sheet now. And this, for new people that haven't watched the streams before, this is a sheet where like tickers that or companies that passed the initial filter that I track a little bit closely. And I have added a lot here now, so it's similar. If you ever watched Dane talk about his, it's similar to his on deck sheet, I guess, or his watch list. So these are just like interesting companies that I pay a bit extra attention to. Okay, let's move on. GENK, or GENK maybe, GENK. It's also a restaurant. And if you have paid attention, this is Michael Burry's owner. That's how it came on my radar. Sorry. So Cyan here. It's not one of his biggest position, but he in his most recent filing he had added this one. And who knows, he might have sold out. What I found interesting today, they are already in my tracker, but I saw they have been, since I added them, which admittedly was after I saw the Burry filing, it has dropped like 30%. And today was down, 12.5. Yeah, almost 30% since I added them, which was 20th of February. So in a short time, he has dropped down below what I was putting as a interesting price to enter. I can pull up the chart. A fairly recent company, like a new company, but there's some good articles here. I remember from last time I watched it. We can go through the fundamentals first. First of all, very few years. Usually that's not something I like when I don't have more years to go off of. And I can only use these 2 years, which is a bit annoying. I see my chart is back now. Still don't have the profile, but this is a restaurant, Korean food. And it's like one of those where you go in and they make the food for you. I think you can ask them to make it the way you want, and they make it there on the spot for you. They have a lot of cash here on the books. They do come across as levered, but a bit like the same one. I assume a lot of them are, a lot of the debt are leases. And if you look at the earnings and stuff, the numbers are very good. And also with the cash generation, it currently trades below $6, So very interesting. And I remember I was reading some of the articles saying that they were expecting a lot of growth, and that this was a bit also like going viral a bit through influencers and stuff like that who were eating in these restaurants. So they were planning to grow a fair bit, actually, if I remember this correctly. And of course, when Burry's involved, of course he might have sold out already. but the fact that Burry is involved holds a lot of weight in my book. There was a hold rating here. And they missed the earnings yesterday, so that's why they are down now, I guess. They beat the on revenue though. But I just want to pull up this article here. I think it was this one. If I remember correctly, he mentioned... Okay, maybe I don't remember correctly, but I thought he mentioned buried. I thought there was a more recent article, but I might have read it somewhere else. I don't remember. Yeah, so this is the point, right? Their success in California already gives GEN a preview of such success on a small scale, and now they're aiming to expand in the United States. So this is a growth story, first and foremost. If you... I have limited the data, and everyone has because it's new, but these are good numbers, right? So there is already a fundamental... You see some good fundamentals here, and then you want to see how the story is. And there's room for growth here. Being the largest restaurant chain offering Korean barbecue also opens up the possibility of gaining viral success if its concepts resonates more strongly with consumers. So it was this article I was reading about. Or changing consumer behavior thanks to external factors such as organic influence. You know. So I'm just reading through this. I need to refresh my memory a bit. Just doing a calculation for what it could be worth. Of course, if this turns out to be interesting, I need to read through this more properly than do on stream, but I don't want to bore you with me watching me read it. So if you're interested yourself, you can read through it on your own. And like I said, I already have it in my tracker, but I do find it interesting now because it has dropped 30% since I added it to the tracker. And that's exactly why you track things. So his conclusion is like, GEN is a company that recently went public in a very successful IPO. However, as investor expectation met reality with the company's results for Q2 and Q3 of 2023, the share price continued to decrease despite the recent market rally that helped boost share prices almost across the board. Some risks to take into mind that might be priced in are the possibility of further consumer weakening, which can lead to a lower than expected growth rate for the company, as well as margin pressures that have not been resolved yet. While the company is garnering some attention from Gen Z and millennials who like the concept and atmosphere their restaurants provide, only time will tell if their loyalty can keep up with potentially more troubling times ahead. As such, the company shares trade at fair price and I remain cautious about the stock for now. No comments. So yeah, I find this a bit interesting, and you will have to figure out what's the growth potential here. And like he said, like the consumers, if people will you know, we might go into some better times, even though the you know, the cuts and stuff like that has maybe slowed down a bit. If you look ahead for the next years, you might be a bit more positive, and that people have more money to spend, and people will go out and eat to restaurants and stuff like that. So and I mean, I'm not sure. I would need to verify these numbers because they look very good. I just don't remember. Did we have any other? They own a lot, the insiders here. So in Burry's, Burry has them down here, so not his biggest position, but it's a new position, so. And also interesting to see Burry go into QRTEA again. He was in it like a year, was it a year ago? Almost. I just want to see if it's on. Can't find him here. Alright. Alright. No, I will have to do that on my own after the stream. I'm not gonna try to fix that now. I was planning to go through and check if it was a lot of leases on the balance sheet, which is probably is restaurants. But yeah, they are already in the tracker. I'm not gonna buy here, but maybe should. I'm never gonna do a buy recommendation or anything like that. But as I said, 30% drop in a fairly short time now. They did miss on earnings, and this has to be like a show me story in terms of growth. But if you just look at these years, they are growing already. We can check the margins. You see margins are up as well in the last year. They do have 30 million in excess cash. So they have no problem. They have no problem covering their short-term debt. They have taken off some total debt, but like I say, I bet a lot of it is leases, so they appear more levered than they actually are. And then when they have 30 million, you know, a market cap is it's high, not high compared to a lot of other things, but 200 million is a lot of money. That's what I mean. But they do have 30 million in excess cash, so that's something. Capex doubled, but naturally when you try to grow, and he mentioned in the article, right? Just want to read that. What did he say about the? For free investing to section there, what comes? Yeah. He's just doing the free cash flow calculation. But yeah, natural to see, I guess, when you try to grow. So doesn't worry me. And I mean, if you only look at this column, which is it's too little to go off of, but I guess this is the time if this turns out to take a lot of the market share for, you know, Korean style barbecue, in the United States, this is probably where you want to go in. So yeah, interesting. Bury holds a lot of weight in my book. That he's involved is a big plus. Oh, Value Hunter, hey. In a previous video, you were both discussing some stocks. Dane mentioned how much he valued it at, and you mentioned what you valued it at. Can you give me an idea of how you put value on a stock? Yes. We have similar ways, Dane and I, to do that. He has a calculation in his sheets that I also have, but I have tried to figure it out. There's one part that Dane has that I don't have, and that's like when this calculator issues shares, my book value doesn't get diluted. And that's something I need to fix, because it needs to be diluted, because we take that into consideration when we value the stock with this calculation. So mine always ends up being too much high. Mine is what you see here, but I don't pay any attention to it, so you shouldn't do it either. It's more like if it's a green or a red color here for potential, you know, for me at this stage. But what we do is we take book value, and then of course we use these averages, you know. We are a bit big on using averages because everyone can have a good year, and then you can see it falls up. I'm sure you understand why we use averages. We use them a lot in the sheets. So if I remember correctly, it's book value, and then we consider like the operating cash flow on a 3-year and a 7-year average, and then the same on a free cash flow generation, and then you take the average of you add them together, and you take the average of all of that. And then you discount. We have a discount valuation for it. That's like the calculation. I think since my calculation is a bit broken there, I don't want to say this is how you do it. I think Dane would be the better person to talk to when he goes through the actual calculations for it. But what I tend to do is a combination of looking at these averages, earnings. If they pay a dividend, that's important to take into calculation. I look at the book value, and then I also get a little bit support on the chart. But if you like slap like a 10 times multiple of these 7-year averages, and you try to take it down as much as you can to be more conservative. That's kind of what I do, just like a rough calculation in the head. And I'm a big fan of what Roaring Kitty said on his stream and his valuation, that if you spend a lot of time valuing a company, that's very good, of course, but you can be right and no one cares. No one's going to care about it because you are just on your own. So even if you are right, the price may never be anywhere close to what you think is right of a valuation, you know. So I think my goal is just getting a ballpark of a valuation. This will never be any exact calculation at all. So to get in the ballpark, and it's more about the downside actually when I take a position and stuff like that. We have talked about 100 times that we like when the stock is close to the 52-week lows, and also when you get these double bottoms on the chart, and then of course we have tracked them for a while. And then we can, at least so far, we have managed to determine if it's like cheap or not. and what the downside is, and then the upside tend to take care of itself. But of course, if you manage to get in at a low point, you need to consider when you should sell, and I guess that's what the upside valuation needs to come into play. But once again, it can go way above what we talk about as a fair valuation. So even then, it can, we can look past the valuation a lot. I'm not sure, Value Hunter, if I answer your question. I think if you want the actual calculation, you should ask Dane about it. I can bring it up on Saturday. If you tune in on Saturday, I can bring it up to him. I will take a note for myself now to bring it up to him. Then we remember we can talk about the actual calculation. And I know Dane is always changing it slightly. And actually, we talked about it not too many days ago that he spent a lot of time changing it, and then in the end, it just adjusts with like a few cents. And then that's where I mean, like, if you get in a ballpark, I'm happy enough. I don't trust my numbers here, but usually you get a feeling for where this can go if you look at the averages here, the book value, if it pays a dividend or not, the earnings, and then you get some support in the chart. And keep in mind, the numbers on the averages here are already diluted, so they are conservative to start with in our sheets. Sounds good. We'll tune in on Saturday. Sunday. Oh, you're from New Zealand. Nice, cool. I lived in Australia for a little bit, so I never got to travel to New Zealand. I wanted to, but just never had the chance to do it. But I hope you are doing well in New Zealand, and it looks like a very beautiful country. And it would be Sunday for you, okay? That was one of my biggest struggles in Australia, the time difference to where I live. I live in Europe. But nice people, a lot of nice people in that part of the world. Okay, let's move on to pets. Pets is also one in my tracker, and I saw it has also dropped quite a bit since I added it. And I'm just gonna read the business description here. PetMed Express, together with its subsidiaries, operates as a pet pharmacy in the United States. The company markets prescription and non-prescription pet medication, health products, and other supplies for dogs, cats, and horses. It offers non-prescription medication and supplies such as flea and tick control products, bone and joint care products, vitamins, treats, nutritional supplements, hygiene products and supplies, and prescription medication, including heartworm preventatives, flea and tick preventative, arthritis, dermatitis, thyroid, diabetes, pain medication, heart, blood pressure, and other specialty medication, as well as generic substitutes. The company also sells food, beds, crates, stairs, and other pet supplies. It sells its products through its internet website, mobile app, customer support center, and direct mail print, which include brochures and postcards, as well as television advertising on the 1-800-PET-MEDS, Pet Care RX, and PetMed brands. And they are based in Delray Beach in Florida. So this is a pharmaceutical company for animals. 100 million in market cap. It actually shows up as safe in my sheet, which means they don't have so much debt, and they do then have excess cash on their hands. And you can see they have a history of that, and they have not really taken on a lot of debt. So it just seems like a stable company. It hasn't grown so much in these years. Actually, it's been very on the same spot all these years, you know, in terms of share count, revenue. You see the equity growth here. It's not fantastic in all these years, but just seems like a well-driven company. And of course, you see the dividend here, 121 in dividend and 120 last year. Earnings down now, but up a bit down on the average, but still in plus on the 3-year average. And I saw it in my tracker, and I think it was up today actually. No, I need to search for it. Hold on. Oh yeah, a little bit up. But what I saw is it trades 3% to the 52-week low, and it's close to my initial buying price. And keep in mind, I added it on the tracker when it was $10, and I took a note saying that if it gets cut in half, this gets interesting again. So the first thing I do, since I already have it in the tracker, I want to check if there's been some development in the stories here from Seeking Alpha. %71 down in a year. It's been a while since the latest article was in early December 23. So they didn't meet the expectations on their latest quarterly report. So that's why they have fallen. Yeah, 2 a share in cash. I don't have 2 well, the calculation there is different than my calculation. They do have excess cash, but then again, they've had it all this time, and now it's lower than it has been in the past. But revenue has gone a little bit up again. Margins are down a lot too, actually, in the last year, which is not something I'm a fan of, but also which is probably why this opportunity exists. The dividend is, you know, it's pretty high actually. 121 in a dividend in this company. But with these numbers still in 23, I can see this going, like, I can see this being worth like where it was when I added it, $10. But of course, if it continues to decline, who knows? And what does the chart do? This doesn't look too good. Just like a long decline. It was COVID years, so it was well below that. Is this historical? No. So not historical lows. And keep in mind, it's a you know, a pharmacy company that I filter them out, but I didn't have the filter on when I found these. I've had them in tracker for quite some time. Since October 23. So here, around here. And it did drop a lot here. Maybe that's I added it in the tracker just before that, probably. And then it just keeps falling. has been undersold for quite some time now. Even on the monthly. So this doesn't look good. And it's about to take out the 52-week low. 3% now above it. And what are these insiders doing? In November, there have been some somewhat decent purchases from 3 different ones at 7. They're of course down on that purchase. And who owns this? I just like to scroll a little bit on these pages. One time I found Bury on page 2 or something like that. So I usually look at the market value down to like 1 million. Not always, but just something I like to do when I have some time. But yeah, I didn't see too many names here that I'm following closely, you know. I'm just I'm a bit interested about this cash position since they've had it all the time. And I don't see a lot of sales, you know. Of course, it has been lately. But historically, they've had good cash without dilution. It's a bit weird, and now what does it mean then that they have less cash on their hands this year? I mean last year then. Hopes for a turnaround. This was written in October. And he had the sell rating and it's 54% down, so not the worst. Not the worst prediction. New management team, such as partnership and acquisitions. Oh yeah, I was sorry, I said wrong. These are of course acquisitions they have made. It's not asset sales. My apologies for that. I don't want to confuse anyone. These are purchases they have made, acquisitions they have made, which then maybe that's what they have used the cash on. You know, I was thinking completely wrong now. Sorry about that. Competition from Chewy. If you follow the GameStop story, you know Chewy with Ryan Cohen. Just jumping to the conclusion here. Chewy, Walmart, and Amazon. That's a fairly big competitors. New management team with experience in turnarounds. Okay. I would want an insider purchase then. Negative operating margin. He said it could be a bargain. He was writing this at 10, but he did have a sell rating. 11. And now it's at 5. So I just struggle a bit to see if they have those competitors, the big ones. It seems to me historically that they have struggled to take a lot of the market share. There's very little growth here, I think. Even with their cash they haven't made. But I guess this is where the new management comes in, maybe, that they have started to acquire other businesses and in the hope that they can start to grow. And it has worked on the revenues here lately. I just need them to, I just need to track this more and see the development. I'm not gonna be interested at this level, even if it had reached the price that I said it would be interesting. And maybe I will miss this one and it will turn out to be a good opportunity. But I think this is close to the 52-week low. You can break down below it and go even further. And then let's say they start to struggle. Maybe they won't because they have the cash, but you know, if they have to cut the dividend, that's going to send the price even further down. He was talking about margins declining. We saw that also on the single years, right? So there's a lot of things that can go wrong here, which makes me think it can go even cheaper. But of course, if you see like inside a purchase, a big one here or something, that could mean like, well, that will catch my eye at least. Negative earnings this year. If they have acquired some stuff, you need to give them some time for them to start working well and see how it affects the cash generation and revenue and all that. But don't get me wrong, it's not. Of course, the share price has declined a lot, but it seems like a steady company. But I'm a bit worried that they have struggled to grow in all these years. But then that article was mentioning that the new management team is experts in turnarounds, and maybe we'll get a bit of a different path here now than you know, from these other years. So I guess that's what you have to see if you track these people. And like I said, it's in my tracker already. So all right, moving on to Wing. That was a ticker you guys threw me today, and I apologize that I didn't get to it sooner. See, straight off Wing, I need to check the profile here. That was also a restaurant, right? Wingstop. Yeah, restaurants in Texas. Oh, classic wings, boneless wings, tenders and hand sauced and tossed in various flavors, as well as chicken sandwiches with fries and hacked carrots and celery that are cooked to order. Old company based in Texas. Restaurant. Straight off, bit high market cap for me, 10 billion. They are very levered according to this, but it doesn't issue too many shares. And I'm sure, like all the other restaurants we have looked at, that a lot of this debt is leases. Or maybe not long-term debt. Just want to see here then what the debt is. Senior secured notes. And when is this due? 26. They have some time on that then, but it's a lot. And also look at the price, steep price, right? And I'm not impressed with the numbers I see here. It's almost to a degree that I don't trust my numbers. So the name, if you are still watching, do you know anything about this from before? Just because it's funny what people are paying for a wing restaurant. Yeah. Okay. So you just wanted to see the numbers we get here. Okay. Yeah, no, I can't say that I like this at all, actually. I think I will just move to the next one you gave me. Another interesting struggling business is NDLS, Noodles and Company. Another restaurant then. Trades 20% to the 52-week low, okay. Another restaurant. Noodles and Company, a restaurant concept company, develops and operates fast casual restaurants. It offers cooked-to-order dishes including noodles and pasta, soup, salads, and appetizers. It operates company-owned locations and franchise locations. The company was founded in 1995, based in Broomfield, Colorado. Another one in Colorado. All right. And what is the chart doing? Yeah. It has been struggling a bit. Not a bit, quite a lot if you just look at the share price. A little bit of a bounce here in October. That's when things started to look a bit promising again. And then it has fallen almost back to like the lows here. And that's what we saw already, 20% from the 52-week low. So 100 million approximately market cap, 245 per share. Share count is steady since the pandemic at 46 million. Revenue is a bit up here lately. They don't have cash though, and they do have a little bit of a short-term debt here. And they do come across as levered pretty highly, and my sheet is actually diluting them quite heavily. And that's also based on the tiny book value here compared to the share price. So this is where I was saying to you with my calculation calculator. Right now I'm just looking at this is red, you know, so that straight off means that this looks a bit ugly. And that's just how I use the I'm not using it in a more accurate way than that right now. Just a quick look if there's potential or not. And this looks a bit ugly, to be honest. I do like the revenue growth here. I saw they are slightly down on earnings, but up since last year. I don't know what this is. There seems like a sale here and then an acquisition on the same number. I don't see the equity growth at all. Capex up substantially. I can't say they have improved margins even. Well, a little bit. Not on the free cash flow. And what is the debt here? Sorry, value. What things do you look for when screening for this. Let me show you if you're not in a rush value, I will show you the process after I have done this company. I have a whole sheet for my screening process, and that's just one method. I use other methods as well. But let me know if you are in rush, and I will jump to it straight away. Just want to check the depth here. And thanks for the questions, by the way. Really appreciate it. Gets the conversation a bit easier for us doing the streams as well. No rush, okay. Let me just finish this company. I will show you the sheets. So they do have a little bit of cash. But my calculation is like excess cash. I've taken out the necessary to make the business moving, and then what cash is left. So I'm always going to have a little bit of a lesser number than what's on the balance sheet here. But that was a lot less, so I'm not sure if... probably because CapEx is up, right? Yeah, leases. So almost 200 there. Okay, so most of it is leases. They have some due in July 27. Pretty high interest on the revolver. Okay. They have some debt, but most for leases, and they have the revolver and all that. Positive operating cash flow also on the 7-year averages. No free cash flow though. And CapEx is high, so that's a big chunk of that. If you take some off... oh, sorry. Yeah. All right. What are people writing here? I can't say that I initially like what I see here. I think they need to improve the cash generation. And even if operating cash flow is positive, it's not high enough. Like, I mean, I would need this to be cheaper for me to be interested. You know, negative earnings. They do have debt, even though a lot of it is leases. And they don't own so much things, and you don't really see... You don't really see the growth story here. You see growth on the revenue side, but not on much else, which is a bit worrying. So I just want to see what people are writing. You said that a lot of people are talking about it. Gearing up for growth, yeah. I mean, they should I don't see the high growth so far. Strong sell in October. It's up since then. Time to grow or time to sow. That was in August. Yeah. Just want to check the most recent one, just his conclusion and his main points. Struggle with growth and profitability in the past few years. The company is making an effort to improve earnings growth with significant investment into restaurant count growth and initiative for improving the profitability. Targeted goals for growth and profitability are still far off, and the current valuation of the stock does not provide upside for the risk. So here's a hold rating. It's down 17% since then. Just skipping to the conclusion here. Or the takeaway. It seems that after a hiccup of multiple years in growth, Noodles and Company is gearing up to accelerate the growth back. The company has had a significant amount of capital expenditure for restaurant unit growth and has multiple initiatives to improve the performance in all of the current restaurants. The targeted improvements haven't yet had a very large effect, but have started to have some significance with an improved profitability in Q3. At the moment, the valuation doesn't bring enough upside considering the risk level we currently showcased financials. For the time being, I have a hold rating. It's a little bit what I talked about as well. Minimal growth, but we did see the capex spike here, which means they might have invested in a business that so they position themselves now for further growth, you know. That's something I would have to check into, but this doesn't qualify for my tracker. I would need it first and foremost to be cheaper, and then I want more cash generation here. And until when you don't see that, it appears more levered than it is, though. That's a positive, I guess. And you know, if they have spent some money in their own business now, maybe they are positioned for growth. But so far, I haven't seen it in the numbers here. I have seen it in revenue, but it's not enough. So yeah, I will have to pass at this for now. And even if it goes down to $2, I think I will need it even more cheap than that. So yeah, that was the tickers today. I think I will wrap up after I have showed you the daily the screening process value hunter. Unless someone wants to throw me a ticker that I can maybe pull up, but it's starting to get a bit late where I live, so I will have to wrap up pretty soon. But yeah, I will quickly go through the screening process then. Value. I'm just gonna X out on a couple of things. First and all, I showed you the tracker sheet, right? So this is where I add companies that I like and that I track pretty closely. So this is one. This is still I would call this a screener as well, you know. But I'm guessing you're more interested to see my screening method for adding companies to this sheet. But my goal is to get this as big as I can, and then start to screen in this sheet and like select a few ones that I find very interesting and then do research on them, you know. And I mean, the companies that I own are here, and they are marked with like this tick. That means simply that they are in my portfolio. So yeah, this is a method of screening, but I'm guessing you are asking for this one, which is what we call the daily and weekly movers. And
and it looks a bit different in Dane's sheet than my sheet. I'm just gonna explain it. We look at the same things. First and all, I have like I have some buttons here that make me I can sort it. I can sort the sheets after all these headers up here. So if I want the daily move, for example, in percentage, I can just quickly press these buttons and it will rank them from the daily moves. But as a default, I tend to have it on the percentage to 52-week low, just to see what's like currently trading close to the bottoms. That's where we like to look. So that's why we'll see my sheet here sorted in this way. Insider buys, it's a big thing that I pay attention to. These are just like time period: 12 months, 6 months, 3 months, 1 month, 2 to 4 weeks, 1 to 2 weeks, and less than 1 week. And I think these two columns, they show up as pink, as just to catch my eye if there's a recent insider buy. So I'm big on these ones. Then you see the market cap, probably something I look at a lot at. I also have conditional formatting there. You know, the dark green means it's like in my sweet spot. So that's definitely something I look at. I do like that they have insiders, high insider ownership, but probably along with the 52-week low and the insider purchases, these are the ones I tend to look most at. But it needs to be connected to everything else here. And these are just like the multiples and the metrics, you know. And this is something I have to update. You hear me often when I start to stream that I'm saying that I'm a bit late because I had to update my sheet. And in Y sheets, I have a lot of support sheets running in the background, you know. So I have to go to one of my support sheets where I have all my database and stuff like that. And I pull it out, I pull it up with Y sheets. They have a new function now called the screener. I'm not sure how familiar you are with the Y sheets, but if you press up here, you get the screener. You can go to get data, and then I have these buckets that I need to update manually. That's pretty much the only manual thing I have to do in my sheets, but I have to do that daily. And that's why I stream after market's closed, because then everything is closed and locked in, and I then update and I get the correct numbers. So if I hit these refresh data buttons here, what it pretty much does is that it updates the metrics here and in my tracker as well. And then of course conditional formatting. I just look at if they trade cheaps, if they are trading cheap to most of these. That's what I tend to look at. And then of course they also need to trade low to close to 52-week low, and the market cap needs to be in a place where I'm comfortable with. And then I have some I know Dane and we use a little bit different filters to pull things in. Mine pull in the daily movers everything that moves 7% up or down. I think Dane has it for like 10%. So he has his a bit higher than me. In addition, I have a filter that tries to eliminate all the biotech and medical companies, and not because I am never going to invest in them, but what I found right now is that in my opinion they are a bit risky in terms of my style and my financial situation at this time. And not only that, but they tend to flood these daily movers. When I didn't have those filters, it usually was like a lot of the biopharma came in here, and it just was a bit too noisy for me, so I decided to filter them out. So you won't see, unless I filter them out based on what says here in the sub industry. So when you see these blank fields, that means it can be a biopharma, but that's the only thing that I'm not been able to like filter out. So I do pull in some of them by what do you call it, by like a flaw in the sheet, but I try to remove them. And then of course you have the performance here, historical performance up to 6 months. And if I want to, I can see the business description here. You know, it's just a quick way to see what the company is doing. I have links to Insider, Open Insider. I have links to the chart, and I have linked to Seeking Alpha, like the news section. And then value, I also have a tab down here called the weekly movers. So this is working in the same exact way, just my filter for pulling them in is based on the weekly move, of course. So this is always a little bit bigger, more companies. But I don't check them every day. I check them right now. I tend to check these ahead of our Saturday stream to see if something has been moving a lot in a week. And usually I find companies from the weekly movers, you know. But in the day-to-day throughout the week, the daily sheet is what I check the most. And if you wonder where we get these things pulled in from, it's through the database that we have generated through our data providers, you know. And I'm actually building out my database in a little bit of a new way, because Y Sheets have recently come with some updates that allows me to build it in a bit different way that I found a bit more secure and easy. So I'm currently working on that. And then I think, you know, today in the fundamentals I was missing some information because I pull it from MarketWatch. I think with my new database I can pull it from the actual database, so it's all in my control, or through Y Sheets instead of external websites. So yeah, that's how I would say this is the main screener that we use, if not daily, very often. I try to check this every day and take notes, even if I don't manage to pull them up in the fundamental sheet. I try to take notes of what has moved, and then when I have time to check the fundamentals, I can pull them up in Y Sheets or in my fundamental sheet. So I would say like this is the most common way for us to screen. You will see Dane has a similar sheet, looks different but it does the same. And then of course other methods are like links that we already have. Insider, Open Insider. I love this website, Open Insider. If you don't know about them, it's great. I wish they had some more information here, but I understand they need to keep it a bit easy. But what I do here in terms of screening is I look at the purchase, like the value. And then I just quickly hover over this to look at the chart. And then I like to pull up the ones that is in a downtrend. And just based on the chart here, if they trade, you know, way below where they have been, I can quickly pull them up in Y Sheets and do some research on them. So I check this also often. Open Insider. I'm big on Open Insider. I mean insider purchases. You see Berkshire buying Buffett, buying more in this company Liberty. So yeah, this is another way to screen. And I think like I have a few other ones. I don't use these too much, to be honest. But I have like a filter already saved through this bookmark. So this is Finwiz. And sometimes when I'm like really up to date on things, I go into this to see if I can find something new, you know. And I just have like filters on market cap, and it needs to have some history, insider ownership, you know, all of the things that I've talked about. I have a filter just US companies, and I also have another one for you know, smaller market caps. I don't use this a lot. And the last one I think I use would be Whale Wisdom. And you know, just check funds, go through filings from funds, see their holdings, pull up the stuff that is interesting from them, you know, and tracking funds or activist investors and stuff like that is also important and a big part of the screener process. And then I also can use like Seeking Alpha, and same, like a little bit of the same strategy there. If you, I have a database of names of researchers or analysts that I follow, and if they have written a report on something that I haven't heard of or not looked at in a while, I pull them up just to check them. So yeah, there's a lot of way to screen, but by far the one I check the most often is this daily mover sheet. So yeah, Value, I don't know if that answered your question properly, but let me know if you have more questions about this process. But for today, I think I will wrap it up here. It's past midnight where I live now, and I work in the morning, so I need to get some sleep before that. But thank you for everyone who tuned in. I really appreciate the activity in the chat, and for everyone who sent me some tickers today. Thank you. And very excited to see the development in the BNED news. And if we have some more news, just want to check it now that I haven't missed something while streaming. But if we have some news, maybe tomorrow, I can guarantee you that we will talk about it a lot on Saturday, Dane and I. But I don't see so much here now, so I'm not gonna bother to go through it again. Yeah, very helpful. Thanks. Thank you, Value Hunter. I'm glad it was helpful. And as always, if you tune in again, please continue to ask questions. We want this to be also educational, and not just for you guys. We are glad that it is or can be, but for us as well. So the whole purpose is to get a conversation going, and so that we can all improve and become better, and maybe have some success here. Hopefully the first one will be BNED. So yeah, we will pay close attention to the development here, and disappointed today that they rescheduled it, but let's see. Maybe it's for the best. Maybe it was good. I think it's amazing that we went up 4% on a day where there was a reschedule on a quarterly report. So definitely noteworthy, and let's see where it goes from here. Thank you for everyone who tuned in. I will wrap it up for today. Good night if you are in my part of the world. I will see you on Saturday with the Ranger Dane. And even if we don't get news on BNED, we will of course talk about it again. And it's getting close also to the ALTO report, you know, on Monday. So let's see how ALTO performs tomorrow before the weekend. And I will definitely tune into the conference call on Monday for ALTO. So I will keep you updated next week on how that is going. I'm very excited, and I'm looking forward to that one. I'm not sure if you should expect like a crazy positive report there. Market has been so and so, but yeah, let's see. It needs to be a lot better than the Q3 report, that's for sure. And hopefully we get some news on the carbon sequestration program. Okay, I will wrap it up then. Okay, see you. Thank you for tuning in, and we'll see you on Saturday. Bye bye.